Adam, give us your perspective then on what we're seeing here from equities. So Asia we can kind of put to one side because they are catching up with the US a little bit and the European trade of Friday. European equities are set to retreat, US also, but not to erase all the gains of Friday. So where does that leave us?
Yeah, I think it's kind of very much a case of, as you were, maybe markets perhaps jumped the gun a little bit on Friday with some of the messaging that we did get, and then we've kind of had a bit more reality presented on top of things. But like you said, it's kind of very much where, as we were, there's no real, risk-off, massive moves that we're seeing, which when you consider the news flow over the weekend that Iran may not arrive to talks, Hormuz is still blocked, I'd say that's relatively encouraging if you are an equity bull. And it's kind of, symptomatic of, the market we've been talking about. It's very much just looking through a lot of the noise from Iran, and I think it's going to take something pretty big at this juncture to derail markets. And I think, obviously you've got the area offset, which is, providing a lot of traction in the market, but I still think the path of least resistance probably is for equities to go a bit higher, but you probably have to be quite selective in that approach. Like I was saying last week, I think Europe, there's a bit of concern there. I think you can have earnings come to focus, around about 10% of Stock 600 are reporting this week, and we've been seeing negative EPS and sales surprises for the region, so potentially Europe could lag.
You say markets. What about the bond market? The bond market, I was listening to Chris Waller talking about kind of the inflation concerns that he has right now, and he was a dove, and he's now certainly sounding a lot more hawkish. Is the bond market going to be as sanguine as the equity market? Like, it never is, but is it telling us a different narrative?
I think it definitely will do. I think the bond market's going to be a lot more cautious in pricing out any of the impacts of the Iran conflict if you do get a positive read this week. And I think a lot of that is obviously because of the landing zone for energy. We still don't know about that. Yeah. That's keeping central bankers cautious, and as such, it's going to be hard for bond markets to price that out. I think, if you look at the ECB, it's a good example. They're basically telling us to wait till June. They'll have more stock of information by then. So you can see a reluctance of markets to price out any potential rate hikes. And you're seeing that with the ECB in particular, whereby pricing is pretty sticky around about that 50 basis point move.
How sensitive are Treasuries, do you think, to Kevin Warsh and what we hear from him later this week?
I don't think there'll be too much cut through. I think obviously it's incredibly interesting to see what he has to say about how he'll potentially lead the Fed. But, markets are ultimately waiting to see how the Iran conflict plays out. I think there's a lot less pressure from the US administration on the Fed. I mean, we saw Scott Bessent saying he understands if they don't want to cut rates in immediacy. And I think, it'll be interesting to see what Warsh's, stance on AI and productivity is. But ultimately, as we've also seen, saw a few months ago, it doesn't really appear to have too much cut through onto other members of the FOMC. They've kind of pushed back and almost argued the opposite. And, considering he is only one vote on the FOMC, it's unclear exactly how much cut through into the bond market at this juncture he will make.
Adam, thank you very much indeed. Adam Linton from our Markets Live team. Remember, you can get up-to-date analysis and insight from Adam and the rest of the team. Just go to MLIV Go on your terminal.